Well, there's one other factor from the pension plans that I should mention, and that is, as was reported fairly visibly in the press, many pension plans have actually reached some of their best funding status since prior to the global financial crisis back over 10, 15 years ago. And so there's motivation for pension plans, if they get to a fully funded status, to just lock it in. And they can do that by buying long-dated bonds. Now, it seems sort of strange that you're locking in such a low yield, but they're motivated by other considerations. When you are running a pension plan and you experience multiple bear markets, where the stock market goes down 30, 40% several times over, global financial crisis and subsequently, they want to avoid that bad feeling that they get when they go from a good funding status to a bad one. I think pension plans have been a source of demand for longer dated bonds as well. But when you look at real interest rates on long dated treasuries, it looks like Jimmy Carter era. I mean, we're talking about the CPI at 5.4, and if we want to use the 10-year treasury, it's not even at 1.4. That's a negative 4% interest rate. That's Jimmy Carter-esque. And so the bond market doesn't look cheap versus stocks. It doesn't look cheap versus inflation. But there are motivations that can be accounting related even for people to buy it. I don't think there's a lot of people that are taxable retail investors that are on a long-term basis motivated to run out there and buy these negative yielding bonds versus inflation. But the supply-demand picture, don't forget the Fed's been a big buyer as well. So banks, foreigners, pension plans, all of these things have been one of the reasons why rates are low. And of course, the Fed is key. The Fed does have absolute iron-fisted control over short-term interest rates. And they have been diehard in their commitment to leaving short-term interest rates at zero. I mean, I think they borrowed that language from me, actually, from your show, Judge, where I said the Fed isn't even thinking about raising interest rates. And they actually borrowed that language, but they're starting to back away from it. One layer of the onion at a time, getting back to we've got to start respecting this inflation data at some point.
Right.
I think I think a 5 handle on the CPI is sort of shocking, and I think a 9 handle on the PPI is truly shocking. And if we get even 2 more months of this type of data, it's going to necessitate a reality check by the Fed.